1/3 of the US economy is made up of the American consumer. And when consumer discretionary stocks are not doing what should be happening during a bull run, we have cause for concern. Today, we break down one of the biggest discrepancies we've ever seen between cap weight and equal weight on the index. And more importantly, we take a look at how some AI stocks are doing well in the sector while everything else is actually making new lows. Is it a cause for concern? Well, of course, it is always good to keep an open mind. So we'll look at both the bull and bear case scenarios for stocks, commodities, and cryptos right now. Well, welcome back everyone to the Daily Show where we talk about markets around the world. We've got the lead news, the macro data, key levels, and of course the hottest charts coming your way. If it's your first time here, welcome to the community. It's great to have you on board. So let's discuss new lows expanding through the market. As we mentioned, 1/3 of the US economy is consumer discretionary. Consumerism makes the world go round, and it's not necessarily a great sign when we have new lows being formed throughout the market. In fact, we now have a new high for 2023 in terms of how many companies are making new lows. What does that mean? Well, we can break down some stats. Here is the first one. And whenever we have stats that are underneath 50%, specifically things like 29% here, it's a cause for concern. Consumer discretionary is often one of the sectors that comes after semiconductors and technology. Generally speaking, these ones go first. Consumer discretionary XLY goes second, and the rest follow afterwards. That is if we're in a proper bull run. So when we get reads like this, you can see some of the drawdowns can be pretty brutal. We've had similar reads in 2020, 2018, and of course, 2021. When we scroll over here, you'll notice there are even worse reads when we go through the last 6 of 8. So in 6 of 8 previous periods, when after 1 month we've had negativity, go through this, and again the statistics of the max losses are not unconsidered. 9%, 10%, upwards of 30 on one case being 2020. When we bring this together with our Dow Jones stat that we got the other day, both Dow Jones Transportation and the Dow Jones in general being down for 5 days, we expected a squeeze into potentially a drop off, and that usually takes around, well, funnily enough, around a month, a few weeks to a month, month and a half after that read. So far, we've been in a squeeze since that point, and we're starting to see the signs of worry in stocks like AVGO or Broadcom. Is this the most significant spread in history? The answer is, yep, more history being made. It is a huge spread, and it just shows you the power of the mega caps in this current market. They're being used almost as defensive sectors, and we know that Amazon is leading the charge out of this one. One of the stocks we favored a few weeks ago has continued to be pretty favorable in this level. However, consumer discretionary is not just that. There is a lot of other things going on underneath the hood, and AI can't really save the index alone. Here's some reads for when we get these types of massive discrepancies. This is obviously the biggest on record. And again, the year is not so positive. If you watched our previous video, we talked about the rest of the world being Europe and everything excluding the US. And actually a lot of markets are making new lows. In fact, 75% of the world index excluding the US are now currently making new lows. So here's the discrepancy. And again, when we get those discrepancies, we start to see those stats. Here's the 75% rule. And you'll notice again, around a month later, problems start to occur. So that would put us in July. We know the debt ceiling is probably going to get passed. But what actually happens after the debt ceiling gets passed? Well, here's a normal year pre-election. So this is what we usually expect from markets. Actually, we generally do get a bit more of a run in technology stocks through the June into the beginning of July. And then things start to get a little bit snaky, a little bit sneaky out there. When we do pass debt ceilings, historically since 1990, we actually have a little bit of a sell-off in markets. Will we get it again? Well, of course, these are the stats that go through. But let's have a look at the lead indicators over the last 24 hours. The first one is NASDAQ continues to outperform all small caps. No rotation yet. We're looking for the signs of rotation. Once that occurs, we'll know that probably technology's had its fill and we can start to move into other sectors. We can start to see maybe a bit of a sell-off in them. And this happens every single time. Here's the 2020 run, then the underperformance. Here's the run that we get in the back end of 2021, then the underperformance. So, of course, we're looking for the signs of turn. We don't have it yet. Or do we? We see skew finally showing compression. The black swan indicator was down significantly over the last 24 hours. That's actually a good sign for bears. It's the first significant move in the skew that we've seen. Remember, the skew shows scary things might be coming, but as it's on the rise, that never, ever, ever, ever signals generally a big sell-off. We had it last year during the August. We had it during the April periods when we got big runs, and this is like no other. Look at that skew getting wild. Big compression. If it continues to compress and markets keep pushing higher, it's certainly a danger sign throughout these markets. The NASDAQ VIX was down on the session while the NASDAQ did end up rallying. So interesting. We'd usually expect the VIX to continue to rise with the expected volatility. So we'll be watching this very closely as we enter into non-farm payrolls, which is coming in less than 24 hours, the big jobs report. Puts were down on the day. That's a good sign. I guess continuing to put this PCC lower is what you're looking for in these markets if you are a bear, or at least you're looking for a turn to maybe get bullish on markets. Treasuries, our special will come on the weekend, but you can see it's continued its relatively bullish kind of run against the wall of worry. Everyone's very scared for the treasuries. We'll show you that most likely treasuries tend to do actually pretty well around debt ceiling. So we'll talk about that once the deal is done. Over here we have, of course, copper into the supply, non-farm payrolls coming up. We expect this to be a big difference. And really the last 24 hours, although markets did rally fairly significantly, the big moves were also on gold and dollar index. And as we expected, DXY weakened and gold strengthened throughout that session. It was probably the more sure bet. And even in our private community, we were talking about that. But copper remains at that level. Central bank liquidity continues to kind of hover around this very similar zone. We're still a little bit too high for it, so we're still in the danger area. The period to be cautious, nimble and fast is best here. And you can see the Qs still absolutely finding those legs in them. Could we be going to 370 before we actually see a sell-off? We'll talk about that a little bit later. But again, central bank liquidity showing a big difference. The difference between the VIX and the bond index move, which is the volatility of the bond market, still sitting around the 94th percentile, an unusual period. It takes a while, though, to play out. So as we mentioned, we still have absolutely no swing-based concept to show a short is coming through the S&P or the NASDAQ yet, but we do know that at least a stock like AVGO Broadcom is showing signs of a blow-off. And it's more than likely going to get a rally in it at some point, but it probably has put the high in, at least in 8 out of 10 situations. Let's move over here to the SPY. You can see the dollar index was falling. The market was raising back up. But still, during these periods of time when dollar has been strong, we've usually seen market fall off. This is the first time that hasn't happened. We'll find out whether it is going to occur. What about the defensive move we've been discussing? For quite a few days now, I'd say about 5 days on the channel, we've been talking about the idea that XLP, XLU, and XLV, the three main defensive sectors, have found significant weakness. They've had 1 day of strength, which was not last day, but the day before that. And they have never had a trail of around 2 to 3 days in a row, really for well over a month and a bit. This is something we are looking for a turn on. And the reason is quite simple. If we see money moving into defensive markets, they're generally hunkering down. And that's a good sign that the technology run is most likely over. At this point, all we know is we're consolidating, and we took a new low on staples, on utilities, those types of sectors are finding like nice basing support, but no turn yet. Okay, so they're back down to key levels. I like the zones, but we haven't got the turn yet. And of course, confidence and also having patience to react to a turn is the best usual kind of strategy in these markets. Here are just some quick stats that we've talked about before in terms of when we get these kind of oversold markets and the annualized returns. There's just some interesting reads for you to check it out. Let's jump into the wonderful world of 0DTE options and what's going on across the world right now. Still a considerable amount of puts coming into the SPY and Qs, of course. More puts outweighing the calls at this stage. Doesn't help the case for any bear trying to get into these markets. That's because they're mostly long dated, so not the short dated calls or puts in general. You'll notice the puts that are coming in are long dated. The calls are short dated at this stage. What about Tesla? It was doing about average 90-day volume, but there were some outliers. McDonald's in general doing a 6 times 90-day average. And then we saw some big moves in this code here, AI. Seems like that run's probably over as well. Another blow off on this stock not performing in the earnings, and people are still jumping onto the calls. I think they're going to have to be pretty nimble and fast on that particular stock. Disney showing some signs of interest as well. It's had some consistent high days of 90-day average, and we're starting to see the huge amount of calls that were longer dated switching to puts, which could be putting a put base on. It all comes down to the timing on these particular options and the expirations. But in this case, yeah, Disney certainly starting to see some positive signs there. You'll notice Broadcom still getting around a 2-to-1 ratio and still 5.35 times 90-day average volume. So these are all short-dated calls predominantly on this particular stock. As we scroll down, you'll see that we're around 90-day volume average, so pretty much 41 million, and 58% are calls. So certainly FOMO in the markets at the moment on the call side compared to the put side, mostly all on the short date. Let's have a look at the short dates here. Here's the SPY, here's the Qs. You can see the call versus put volumes across all of the majors. Some notable ones were gold. We talked about that over the last 24 hours. We saw some short-dated gold calls coming in and some long-dated ones. They were pretty interesting and certainly helped us to build that island reversal concept out. Gold had a pretty good 24 hours, as you'll see soon. SPYs, not enough puts on the 0DTEs. Look at that. Call, 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 call. Top 4 all calls, big volume. Look at the dates. Stupid 0DTEs, yeah? That's what was coming through. We ended up 421. You can see 422 was the top strike. It pushed those hedges through. Let's move over to the individual stocks. You can see here all of the individuals, mostly Tesla, Nvidia, Apple related. Apple's holding pretty well. It's getting a strong call buy consistently around that 180 strike, which is holding it up. We'll look at the stock later because it did have a tweezer on it, and it never actually got a new low. Now, if it had got a new low, I feel like the shorters would have come in. So it's an absolute time of critical levels that need to be broken. Economists still have absolutely no idea what the Fed's going to do. It's moved from 60% plus are going to see a rate hike to now 80% believe that it's no rate hike and they're going to hold. I'm sure it's going to change over the non-farm payrolls jobs number, so we'll keep watching that one. What about the last 24 hours? It was all about gold. The shiny metal and metals in general were back for the session, specifically GDX, GLD also doing very, very well, and gold futures up on the session. We had a guess that that might happen because of the nature of the price action that was going through. What was probably surprising in some ways is we saw no follow through on defensives. Utilities, staples, REITs, healthcare, worst sectors on the day, certainly not showing us any signs of defensive movement by the markets just yet. Over the last 5 days, it's all been about semis, thanks to Nvidia. XLK up 7%, so considerable. And most of the ones we hate, which of course are energy and metals, still down over the 5-day average. So just showing you again the tale of two markets, two different types of ways to invest. If you want to be a dirty bear, it's been clear that dirty bears have been in the metals and the energy stocks. And if you want to be a bull, well, you know, semiconductors have been good. But yeah, technology in general has been pretty strong. But notice XLY, consumer discretionary, it's out at 2.85%, but it's really driven by Tesla and Amazon, not by the other stocks. And I think that's very important to note. Let's go over to the dollar now. We've seen it reject this zone. It actually looks like it's in a bit of a short at this period. I would guess, based on non-farm payrolls, often the first move is the false move. Now, for anyone that doesn't know what non-farm payrolls are, it's the jobs numbers for the US for the month. The unemployment numbers come out. Often we get revisions for the previous months. Generally a fake figure, to be real. I mean, they're revising these things somewhere upwards of a quarter of the overall size. I mean, it's ridiculous. But I would think that the most likely scenario for the dollar is for it to probably find some kind of bull pick at some point, move up to around that 104 kind of 10 zone, and then around here potentially see the turn to go short. This was a great short up here. A few members of the private community got that one. Congratulations. Certainly in the day trading masterclass. Absolute replication up there. Beautiful level. Congrats. Yeah, that's a nice trade. I think here's a good take profit for that trade initially. And then what you're looking for is up here. Remember, it's really important to be able to replicate your strategy. Certain times you'll have absolutely no idea what's going on. Certain times you'll feel more confident and you'll say, I've seen that before. This is a turn we've seen before. It has come back down to resistance becoming support. But overall, around this area here, there should be hopefully some sellers, and it probably works about 7 out of 10 times. Obviously, you've got to practice your own risk management, etc. Let's take a look at gold. So gold hit into our heavily traded zone, and it found nice buyers through the session, got up into this red area. This is supply, and then it's finding some sellers. For gold to really find legs, it needs to get through 1992. And I think initially it may go back. Where's the defended zone for gold? Somewhere around here is probably where a lot of people have stop losses, 1950. I wouldn't be surprised at all for non-farms to come through. Something like that to occur is certainly a scenario I'm playing with here on gold. I'll set alerts, watch the reaction, have the patience. We'll find out what happens next. And then, of course, once you see replication, that's the key thing here. But yep, we're at support or resistance. Sorry, supply or resistance at this point, and this is where you usually expect the bears to come back in, and it's in line with everything else. Let's move over here to GLD. So we saw GLD come out with the island reversal, then we had a kind of lackluster session, then we had a nice one. I probably expect this to pull back and then hopefully move forward. There is a little pocket here for gold. Obviously, I'm negative most of the time here on gold throughout until pretty much October, November of this year, but there is a pocket that tends to happen between maybe the mid of June or around now into the August period. And then often we do see weakness again in gold. I'll be watching it. Certainly this has been a good little couple of day trade, and then into non-farms, maybe descaling a portion might be worthwhile. What about oil? It found some legs. We actually saw some buyers recommit into oil, and in general, it has made a first time frame change of trend. There's going to be some problems around 71.85. I wouldn't be surprised at all for it to pick back down to 69, maybe then buy back up into this level, and then possibly sell back into 66. Anything in this 67, 66, 65 is where we know oil buyers traditionally have been, and this has been helped by China in general and the figures that are coming out there. If we go over to natural gas, you can see that one's really dropped off again, and it's actually gone underneath our 61.8. So around here is where we expected this particular market to maybe find some buyers. There was no real commitment there. It's still in the range. It's not underneath 2.08, but natural gas does this. It takes a while to potentially base. If it drops under that, could be worthwhile setting an alert. If it rallies back through, that's again another one of those bullish signs. But at this point, it's pretty deep. And a few people have asked me about it. Yeah, I knew it would most likely sell off this area. I thought here or here we might find buyers. It's coming deeper. I think you've got to be cautious here. What about XLE Energy? As I've said before, usually you get that kind of little run into the start of June and then it drops off. I'm still negative on energy overall, but yeah, there is a period where it often comes up. Tesla's being run by options, 0 DTEs at the moment. So if we're looking at it from a technical basis, you'd have to say, hey, it looks pretty strong. We are at these weekly high closures, so I'd say it's at res, a perfect res before NFP. NFP is going to be the dictator on this one. If it does get through, though, I wouldn't be surprised at all to see a 230 style level for Tesla before we go back. I still think 140 is very possible for this stock. We got between, how close did we get to it? 152. Still think down here, 145 is very possible. Probably going to happen. Timing, though, will be everything, as we know. So at this stage, it's at resistance into NFP. NFP will make or break that particular trade towards the bull side, I would guess with. AVGO continues to fall as everyone starts to question whether it's worth the value. I mean, what is there to question? I mean, this stock is up a huge amount. My thought process is probably we do get a rally into a dump, and this is probably showing you that certain AI stocks are starting to show weakness signs. So what about NVIDIA? Well, NVIDIA did, of course, its island gap up and then down. It had that sell-off. It didn't go over 10%, which was pretty interesting. Then we got this rally back coming to a critical point. I'm still watching NVIDIA very closely. I'm not sure this one's top is in yet. It's fell around 9. I usually like to see 10 to 15% fall. So not quite enough selling on this one. Maybe NFP will sort it out. Maybe there's another leg in it. I don't know yet. You got to be very, very cautious here on NVIDIA. If you play it, be nimble and fast, practice risk management, that type of stuff. Here's one where you need to see your triggers. Apple gave us 2 tweezer, which is certainly a negative style sign. And if that had gapped low, I tell you what, I really think it would have been a short. If that had gapped low, you've got all the hallmarks. Tweezer, gap up, gap low would have been really sweet. Obviously, that didn't happen. It just rallied through the session. Because there's no trigger, no harm, no foul, no reason to predict something. You just have to wait till you actually see an activation. It's the difference between pretty much anyone that does really well in trading and people that do kind of poorly. You can't get in early. You know, getting in early often gets you owned. So in this case, it's a strong daily close. It kind of signifies potential of further upside here from the Apple stock. And yeah, I guess non-farm payrolls again will fix it up and figure out what's going on. We're still in the potential of an island reversal, though probably another day down. Then if we gap, then we know what it is. But at this stage, it's still bullish. There's no swing turn. There's no underneath that level, which we've been looking for. Of course, until that happens, we don't know we're in a swing trading market to the short. It's still bullish until proven otherwise. We talked about Disney. Now, Disney's seeing some options on it, which are favorable to the bull. Finally, the question is, will we see the turn? We have filled one of the gaps. That's good. Have we got a gap out for Disney? No, not yet, but that could be something that people are looking for. I think it's a worthy stock to have on the bull train. It does do badly during pre-election years, but let's face it, it's already done very badly. I mean, if we're taking it from February to now, this stock is down around 21.49% from just that period, not even the highest period. So again, there are opportunities in this market behind closed doors. Let's move over to the DAX 40. Find the buyers at this level. Coming up to a resistance, good switch turn. This is where you would expect basically sellers to recommit. You can see the block here. And this is generally where sellers would recommit to the DAX. Where are we? Ahead of non-farm payrolls. I expect it to do bugger all until then. So generally it will sit around and wait. And then we get, ideally that. But if we do bust through, then markets will go to their next period's highs. Remember, trends are still on. There is no swing trade difference for Europe, even though Europe has been weak recently, making new lows, as we put in the previous video. It's not broken yet. No closure underneath the lows. No dice. XJO, one of my weak markets of the year. Of course, the Australian market here. It's finding a little bit of support on the trend line. If it busts that trend line, though, watch out down below. 6,950 is my next level. So I'm still negative on that market. The Dow looks terrible still. Is it some giant flag? I don't know. I always have a rule with flags that if they look like this, imagine putting that in your backyard. Would that even fly? You're going to need some serious tsunami winds. So I don't really think it's a flag. A flag is meant to be a continuation pattern that is relatively quick. So it's meant to be some kind of consolidation that really comes through. So say like here, if that had actually gone up, that would have been a good flag because it's consolidation. Then the momentum slingshot comes through. The pole would have made sense as well to the distance. That's the type of thing I'm looking for. This, well, I don't know what that is. That doesn't look like a flag to me. Let's move over to the Qs. Here we go. Qs finding a strong session. No new high, but again, strong session. Testing the resistances before non-farms. Not much information there. We'll move over to the S&P. So the S&P continues to go up. Mark this one down. 4,100 going to be a very important point. Of course, everyone can see 4060, but I think 4,100 is defended. So if the market is able to close that, I think swing traders are going to come in. A dull market, very tough to short. Now, of course, I'm on record to talk about the fact that at 4150, I have spreads at 4K and lower zones. Of course, I've got 4 months on those. So spreads is a good way of getting time and doing your risk adjustment. So 1/3 style entries, well, that's just the way you can look at it. Now, do we have a turn yet? No, we don't have a swing trade turn. We do know that we've filled one of the gaps, which is kind of cool, but we do have 2 unfilled gaps up here. Are we about to see 4,300, 4,350 squeezes? We've talked about this extreme zone 2 as being a possibility for a while. Maybe we'll know after 24 hours. Non-farm payrolls probably going to push some extreme numbers. ES trading at the Bollinger. You can see we thought we'd get down to 4160 before finding these bulls. The bulls came in early, 4176. We saw the ADP non-farm employment change, strong number there. The US markets liked it and they moved up. And now we find ourselves at the peaks. Here's the ES or the US 500 futures. Again, I did expect this to come down a little bit more. I was hoping for a 4160 for the bull bet. And it didn't happen. 10, 15 points. Oh, well, too bad, so sad. Yeah. Sometimes that happens and you just don't get your level. But guess what? You've still got the zones that you're looking for. Dollar, very beautiful over the last 24 hours. Gold, also very nice. So different instruments, different trades, different opportunities. Just take the ones that you believe you can replicate. That's the key. We're at this point, frankly, who knows which one it's going to go with yet. We know the trend's up, so you have to always bet on the bullish side. I have a lot of signs with the skew and other things to, of course, believe swing traders will come into the short soon. But we've said that before, and we've had these levels around here. It's very, very tough for you to completely predict it. I'd rather see the actual signs come through. Skew compression is good, though, for the bears. Let's move over to the Bitcoins. And yes, I did say Bitcoin yesterday. It's my nickname for it, Bitcoin. As we can see over here, we sold the most traded level. We pushed down into the 26,000s again. We ended up getting through that little bullish position that we thought could be placed in here. And this is just very choppy. I mean, the trend is down at this stage on most of the time frames, 2 hour, 4 hour, etc. This certainly knocked out a lot of traders, I would feel, towards the bull. And we're waiting for non-farm payrolls. I'm sure it's going to move off that. And you'll notice where the daily close is, which is here. If we get a new daily close under 26,300, then we should be going to 24,000 for Bitcoin. And that's going to be pretty exciting for a lot of people. I'm sure people want to buy that level and all sorts of things. I'm not so sure. If the markets start going bad, you'd have to expect Bitcoin to fail as well. ADP, non-farm employment change, 278K, expected 173. I don't usually pay too much attention to that number, but it is hot. It shows that really the Fed's got more work to do. But, you know, that's the way the cookie crumbles. If we have a look here at the non-farm employment change, it's going to be the number that everyone's looking at. This one here, will we finally see something that's cooling in the US economy? Based on this number, probably not. Will that therefore force economists to believe a 25 basis point hike is coming? What's going to happen with yields? All these things are questions that we can open up with. I would say the number's going to be pretty strong based on what we've seen so far, but how the market reacts to it, do remember non-farms is always or generally a liquidity trap. So often the first move is the false move and the second move is the real move. So that's at least, I would say 7 out of 10 times it tends to do that unless it's a clear-cut number. Be careful out there, guys, and practice risk management, especially if you're a scalper day trader. I usually find the best thing is to react to the number than to predict the number. If you've enjoyed today's video, make sure to check out our free trading cheat sheets. Follow us on Twitter and anything else that you might like throughout here. Thank you very much for watching. Appreciate you guys, and we'll see you in the next one. By the way, if anyone's playing Diablo 4, have a good weekend, guys. Bye for now.